In this video, I'll be sharing with you 8 simple tricks to pass any prop firm challenge, and these tricks work every time. I mean every single time. Welcome guys. So this is a part 2 of the previous video I did, which is why traders fail prop firm challenges. And in this video, I'll be highlighting how exactly you can pass prop firm challenges using these simple 8 tricks. So the first thing we are going to do is to first of all consider the parameters you need to actually pass a prop firm. So before we actually go ahead highlighting these simple tricks that you need, let's first of all categorize everything needed to pass a prop firm into 3 basic categories. And number 1 will be risk, number 2 will be time, and number 3 will be priority. So you realize the rules and the guidelines for every prop firm are actually coined around these 3 categories of risk, time, and priority. When we talk about risk has to do with leverage and mostly drawdown. So in terms of the kind of challenges you most likely will be encountering will probably be the evaluation challenge, which you then have rules such as you are not allowed to risk more than XYZ because of the drawdown limit that you're given, possibly 5% daily drawdown with a maximum drawdown of about 10%. So that automatically controls your risk. And then your risk is also a function of leverage. So in terms of risk, we're talking about how leverage and how the drawdowns should be factored in when considering or when making a trading plan to pass a prop firm challenge. Now the second factor will be time. So time comes to play when you consider the minimum trading days and the time duration you are given to pass a challenge. In most cases, phase 1 challenge is usually 30 days and phase 2 challenge is usually 60 days. So you realize that factor of time is usually a major obstacle or a major hurdle so many traders have to encounter and more or less beat. And secondly is priority. Priority in terms of the rules has to come in terms of the profit target and the scale up plan and retrial target and the likes. So these 3 categories are actually what we are going to be basing our plan on, so we can go ahead and have a concrete plan to pass a prop firm. So these are the 8 tricks you actually need to pass every prop firm, considering these 3 factors of risk, time, and priority. So this is the plan. Number 1, let's talk about your strategy. So if you are a very good trader, you might actually not even still be good enough to pass a prop firm. Now here's why. For myself personally, I love to swing trade. However, I also do day trade. I scalp sometimes, but I don't really like to scalp, but my personality is more of a swing trader and a day trader. Now it's okay to be able to scalp, day trade, and swing. It's very good. Some people actually know how to do that. For me personally, I've come to realize swing trading and day trading is what resonates best with me. But the truth is, if you want to pass a prop firm challenge, you cannot pass a prop firm challenge swing trading. Well, you might be able to, but it's not, how would I put it? It's not something that you can use to consistently pass a prop firm challenge. Now, challenge, not trading the prop firm account. If you are already a funded trader, then it's great to swing trade if the prop firm you are using allows you to hold trades over the weekend. But so here's why I wouldn't advise swing trading for prop firm challenge, because as a swing trader, I've come to realize you might not get a good trade every week. In fact, there are months when you won't even get a good swing trade, in fact. So you need to consider, if you are taking a prop firm, consider your strategy and make sure you analyze your strategy and coin out a day trading or scalping strategy around it. If you are a day trader, if you are a scalper, then you should be successful as a prop firm trader. Now, number two is how your strategy then comes into play. So it's fine now you've decided on a day trading strategy, on a scalping strategy that works. As a prop firm trader, or as someone who wants to trade a prop firm challenge, you should focus more on high win ratio. And when looking at risk to reward, I know traders out there do as much as 1:100 risk to reward, 1:50, and the likes. I do it myself. However, when taking a prop firm challenge, you should focus mostly on high win ratio and at least minimum of 1:3 risk to reward. Now, it's not like your trades cannot do 1:20 and the likes, but because of the time factor, because of the 30 calendar days you have, there are several times you see your trade go into massive profits, and then before you know it, it comes back to break even. You have just 30 calendar days to pass the prop firm challenge. You have 30 calendar days to do 10%. My advice will be focus on high win ratio. Now, one thing is, when taking a prop firm challenge, there's usually pressure on you because of time. For most traders, they do feel this pressure because of time. Now, when you are under pressure, it's easier to just focus on high win ratio and good risk to reward in terms of get in, get out fast, get in, get out fast, get in, get out fast, till you can meet up your profit target. If you keep dwelling on one particular trade to do your entire target, it might not always happen. And eventually you find out that it will start affecting your psychology when you see the first trade do about maybe 4-5%. Before you know it, it comes back, it's break even. Second trade does that, third trade does that, and before you know it, 30 calendar days is up. So what I would advise is, as a prop firm trader, focus on high win ratio and at least minimum 1:3 risk to reward. At 3% risk to reward, 4% reward, close out the trade, move to the next one, because you are day trading and scalping. Remember that. Now, the third factor will be your risk. Now, this is what I would advise. Start risking with 0.5% of the entire account. Start your trade with 0.5%. Now, the first trade, risk 0.5%. If that trade goes well, then you've made 3% of 3 times 0.5%, which is 1.5%. Then your next trade, since now you are up 1.5%, you will feel more confident. It's easier for you to then risk 1% this time around. You know, if this trade goes against you, you are still above capital. You still have 0.5% risk to play with. And if the second trade does go in your favor, that's 1 times 3, that's 3%. So now you are up 4.5%, which makes a whole lot of sense. The next trade, you can decide to risk another 1%, and it's easier that way. However, if you start with 1%, and let's say you lose the first trade, you're already down 1%. If you start with 0.5% and you lose the first trade, you are down 0.5%. It is easier to recover back. Because the way the forex market works, right? You can have a 70% win ratio. However, the 70% win ratio isn't factored across 10 trades. It doesn't always happen like that. When you're calculating your risk ratio or your win ratio in forex, you should calculate your win ratio over 100 trades, over 1,000 trades, over the trades you've taken over maybe 6 months, a year. So let's say peradventure you have a win ratio of say 70%. What that means is, at the end of 100 trades, you must have won 70. That doesn't mean you could take the first trade or even the first 10 trades and not lose. You are allowed to lose 30% because your win ratio is 70%. So the truth is, in trading, you don't know when you would enter a period of a period of a losing streak. Now, it happens to everybody. I go through mine. I have my winning streaks. Likewise, literally every good trader out there can attest to this same thing. Every trader goes through winning and losing streaks. Now, where the quality of the trader comes in is actually in how you can manage your losing streaks and get out of it as fast as possible without losing too much. So that is why I would advise start with 0.5%. And one thing I've noticed after working with a couple of traders to pass prop firm challenges is the fact that many traders do get anxious as soon as they start trading the prop firm challenge. The first trade is usually out of anxiety. And my advice, start with 0.5%. If you lose even the first two trades, you are just down 1%. If you lose the first three trades, you are just down 1.5%. If you win the fourth trade, you are back to capital. However, if you started with a risk of 1%, you lose the first trade, you are down 1%, second trade 2%, third trade 3%. Should in case you actually see those three trades on the same day, you just have literally 1.5% left for you to max out your maximum drawdown per day. And that's already will start messing up with your psychology. So my advice, starts with 0.5%. When you are in profit, then you start risking your profit. So do not risk capital again. Soon as you make profit, you then start to risk profit. You can then increase to 1% because you already have that as your profit. And the fourth point now will be, do not trade the news. I know so many traders out there like trading news, and if you don't know, or if you do know and you do like trading news, one news you can actually maximize is Canadian dollar news. Canadian dollar news is actually, in my experience, it's the easiest to trade literally. However, if you're trading a prop firm challenge, my advice is simple: do not trade the news. Now, this is because you do not know what could happen during a news release, and so many prop firms even frown at news trading. So why not just get used to it? And more often than not, by the time you even become a funded trader, you won't be allowed to trade during news. So why not just get used to it? Avoid trading news. When you're trading a prop firm challenge, you need accuracy as much as possible, and the trading news in itself does not give you that much accuracy. It's more or less a 50-50 thing. Yes, I know you're very good at trading news, but why not play safe? Why not play safe? And the fifth point now will be, only trade London and New York session. So my time zone is GMT +1. So London session is basically 8 a.m. till around 10 a.m. and New York session is around 1 p.m. till 4 p.m., 4:30 p.m. thereabout. However, if you can, although this means the number of trades you will see will actually reduce, but if you can, preferably trade only New York session. Now, the rationale behind this is, should in case the market wants to throw stop wants to manipulate and whatever, it will have done all of that in London session, and New York session most of the time will just be trend continuation. And one thing you also notice is, if you check Forex Factory, most especially for pairs like US dollar, which is literally the most traded pair in the Forex market, the US dollar, the Canadian dollar, and even the euro, you realize most of the news comes out in New York session. So it's easier trading New York session after the news, and you more or less get smooth sailing. So that is another trick you can add to your arsenal. And number 6, consistent risk practice. Now, what I mean by that is, many prop firms have analytic tools that more or less track your account, track your risk parameters, and watch out for what you are doing in terms of risk. Now, the truth is, for most prop firms, they are bearing literally all the risk in terms of, in case you lose their account and the likes. So one thing they are most particular about, which is why they actually give these rules in the first place, is your risk management strategy. So while the advice is simple, have a consistent risk practice, meaning you should stick between 0.5% and 1% per trade. Don't go jumping from 0.2% to 2% risk on the next trade. Many times your accounts will be flagged, and in some cases, these prop firms could just come up with different mumbo jumbos and give you reasons why they can't even accept you as a funded trader. So to avoid this, why not just stick to a consistent risk practice? I think that's much easier. And the 7th point now will be simple: focus on getting profit above the starting balance. Just focus on getting above the starting balance. Now, I know the target is 10% for some prop firm challenges. For others, it's 8%, and that is what you want. However, make it easy for yourself, okay? I like to tell my traders, pace yourself. if you come in and from day one you are targeting 10%, it's very doable. It's quite easy, literally. I mean, it's quite easy. And more or less, if you're even using a good prop firm strategy, if you're interested in actually learning my own prop firm strategy, which I use to trade for my investment firm, and so I do not trade for a prop firm, I trade for an investment firm, by the way. If you're interested in learning this strategy, it has been back tested for months. Actually, I've been using it for a couple of years now, but it has been back tested for years and for months, and it's very reliable for prop firm because it's safe and it has a high win ratio and good risk to reward. Literally every week you get at least 1 to 2 good trades weekly, and in some good weeks you could get way more than that. If you're interested in learning this strategy, I'll be teaching it this month of July. Simply join my Telegram group and click on the link to join, and you'll be taught that strategy. The link is just in the description below this video. Make sure to check it out. So that being said, focus on getting above the balance. Why you are doing this is because, let's even assume you eventually do not get to that 10% target. If you are at least above the balance, most of these prop firms would allow you a free retrial or an extension of the trading days. Now, the truth is, the market will not always be favorable. You will not always get favorable trades. However, when you pace yourself, when you focus on at least getting above the balance, it makes the journey much easier and less stressful for you. So this is what you simply do. Risk little, maybe start with 0.5%. Soon as you are up 1.5%, your next trade could be another 0.5%. So now you are up 3%. And then your third trade could then be 1%. But the moment you see you are back to 1% profit, reduce your risk. Reduce your risk straight up, because you are more interested in at least staying above the balance. When you stay above the balance without breaking any of the other rules, most likely you get a free trial. However, if you are targeting that 10% and you keep risking more, and eventually the 30 calendar days get completed without you achieving that goal and without you even staying above the balance, you have to pay to get another challenge, and that could be quite depressing. And the last point before I go will be simple. Do not take a challenge that's bigger than you. Now, what I mean is, do not take a challenge that's bigger than your mindset. So I was sharing on my Telegram channel when I handled my first 50K account. That was a couple of years back, and truth is, that amount of money was way bigger than my mindset as at then. I mean, I would do my risk management, calculate my lot size, and I couldn't bring myself to take a trade using a lot size above a standard lot, and that was because of my mindset as at then. Now, for you, your mindset might be only able to accommodate $100,000. Do not take a challenge more than that just yet. Pass that $100,000 challenge first, then you can upgrade later. And this goes in two ways. It could be in form of your mindset not allowing you to do that, and the second way could be in a situation whereby you are using more or less all your money for that prop firm challenge. You are more or less, if you do that, then the risks are much higher. So what I mean is, for instance, you are a trader with $1,000 capital. Instead of using that $1,000 to buy one 200K account, why not split that $1,000 into 4 places and then use $250 to purchase maybe a 50K account or a 25K account, whichever prop firm you are using. Now, what this will do is it will ease you of some of the pressure behind you over risking and more or less passing that challenge, because you know you still have capital to take 3 more challenges. So this is the rationale behind it. It reduces the risk automatically. So take something that's not bigger than you as at that moment, because I think it will make more sense to risk quarter of your capital to get a prop firm account, because if you then pass, let's even assume you fail the first challenge, fail the second challenge, if you pass the third challenge, your profits would more or less cover up all your losses. So let's look at a typical scenario. So let's say $250 can access a 50K account, right? You lose the first challenge, lose the second one, the third one, now you pass it. If the profit split is minimum, let's say 75%, and then on that 50K account you manage to do 5% in the first month, remember they're also going to refund your fees, the fees you paid to purchase the account in the first place, which means your 250 comes back. But let's say you can do 5%. So 5% of $50,000 is $2,500 at a 75% profit split. So that's about 50% will be 1,250. 50% of 1,250 is about 775. So 775 plus 1,250 is about $2,000 thereabout. So already you've recovered back the $500 you spent, which on the other two challenges which you failed. So more or less this works both ways. It reduces the risk for you and increases your chance of winning, because now you are more calm, you are more cool-headed, and you are not in a hurry. So that's it from me, guys. These 8 steps would help you all the way to pass any prop firm challenge, and guys, it will always work because your psychology is in check. You've put risk into consideration, you've put the time limit into consideration, and your priorities are set, are right. So that's it for me, guys. If you're not a member of this channel, please make sure to subscribe on this channel, and make sure to join my Telegram group, guys. That's where all the action happens.